Good afternoon, Quasar Markets Live. You have your host, Howard Hondo Greenberg, here to bring you everything that's important to me in today in the world of crypto. As most of you know, I am also the president and co-founder of the American Blockchain and Cryptocurrency Association. So let's get right into it. First thing everybody wants to know, of course, what's going on with Bitcoin today. We had broken through the 66K mark for the first time since July. Made a nice run up as high as 66,508. Has pulled back here about $600, $700 as we're getting into the afternoon area. Let's pull up the daily chart and I'll tell you what I'm looking at here, or what I have been looking at. Whoops, hit the wrong button. And I have been talking today about the fact that we could see ourselves make a move up towards this 68,337 spot. It's sort of where we stalled out back here in mid-July. We did make one or two quick jumps over there, but we weren't able to get a close above that 68,337. So it's really the spot that I'll be watching for a lot of sell pressure, I believe, as we start to move up there. But anyway you look at it, really nice move up here. You know, we were sitting at 52,500 back September 6th. So over the month, a pretty nice move up here. September in general has been a poor month historically for Bitcoin. So seeing a huge amount of bullish sentiment with the fact that we have, seen that increase up. So that's what we're looking at when it comes to Bitcoin on a daily chart. On the shorter term charts, you can see here it's rode right up through that MA, broke through it here, yesterday around 3 p.m. and it's been riding up that 10 MA here on the hourly, using it as support since. Has had trouble at the top of the linear regression on the hourly chart. So we could see a little bit of a tiring out here. Could see a little bit of a healthy retracement. We talk about that. And when we get down even further, what we see is we might have already done that retracement. I talk a lot about the VWAP, the value weighted average position, average price, excuse me. That is very important for scalpers, day traders. And you can see, I do that every time. I forget to hit the button in there. That Bitcoin came right down to the VWAP here earlier, right around 142 about 20 minutes ago, and bounced up nicely since then, giving us a nice little move to the north side. So quite honestly, as a scalper, that's a pretty positive sign. When we break through, as you can see, VWAP here, we tend to get explosive moves. So a bounce off of it sometimes, and since we hadn't retested it yet, do we retest that here and get another move up is what you want to look for. And even do we see a second retest of that VWAP here today. So pretty bullish overall when you look at the markets. Ethereum up about 2.57, making even a nicer move up today. Finally breaking through 2,700 that we know had been such a sticking point for it here for a while. Again, finally getting through that. My thing on Ethereum is, can we get above that 27, and can we close above that 2,700 mark? What's been causing some of this move to the upside? I think it's important that we take a look here, and what we can see is if we look at ETF flows, these again Bitcoin ETF flows, and put them in US dollars, we see that yesterday we had about $365 million flow into the Bitcoin ETFs. So a huge amount of money moving into those ETFs. Part of the reason we've seen the huge jump up today. And if you look, it's been a solid week. If you really look back here to like the 19th, we gained 158 million. 92, 4, 136, 105, 365. So what do we got? 365, 470, 600, 700, almost $850 million, $900 million that has flowed into ETFs this week. I do think there's a bunch of reasons for it. I think, again, as some people are moving out of money market CDs, some of those things that are there, I think that has part of the impotence to it. I do think institutions are moving into Bitcoin as a hedge. So we are seeing that. With that being said, there was a interesting report from BlackRock's, excuse me. We're not going to go through it, but I do want to point it out for those that are interested. BlackRock had a nice presentation here. Bitcoin, a unique diversifier, a good report that they put out. Remember, they are the people behind the IBIT, the largest Bitcoin ETF. And the key points that they go over here are investors considering allocating to Bitcoin are grappling with how to analyze it relative to traditional financial assets, given Bitcoin's unique properties and limited history. Bitcoin with its high volatility is obviously a risky asset on a standalone basis. However, most of the risk and potential return drivers Bitcoin faces are fundamentally different from traditional risky assets, making it unfitting for most traditional finance frameworks, including the risk-on and risk-off framework employed by some macro commentators. And it's something that we talked about here. I think I brought it up in the last Crypto Corner. When we say that, what we mean, or what I mean when we say that, is Bitcoin is definitely a risky trade. It's very volatile. We're very early in the life cycle. Where the risk off comes is if you're asking me long term, is it a hedge against issues in governments, issue with monetary supply, all of those different things? Yes. Is it a hedge versus the stock market? Is a hedge against gold? Is it a hedge? It's definitely, we know a hedge versus, regular US dollars or other currencies. So we do see that. So it doesn't fit neatly into the framework of what most commentators use when talking about risk on and risk off. That was one of the biggest takeaways I had from this entire thing. They do talk a little bit about why it's important. Bitcoin's nature as a scarce, non-sovereign, decentralized global asset has caused some investors to consider it a flight to safety option in times of fear and around certain geopolitically disruptive events. Again, we have seen that play out time and time again. So that's the case. And then their last sort of key point, over the long term, Bitcoin's adoption trajectory is likely to be driven by the intensity of concerns over global monetary stability, geopolitical stability, U.S. fiscal sustainability, and U.S. political stability. This is the inverse of a relationship that is generally attributed to traditional risk assets with respect to such forces. So that's why it is a risky investment. There's no doubt on the short term that it is, depending on your time frame, it's the question of, or it's the answer to, is it a risky investment or a risk off investment? The longer, in my opinion, that your time frame is that you're looking at it as an investment, the more it becomes a risk off investment. So just wanted to point that out. BlackRock, the largest investment company in the world with, assets under management. So, and they have gone in full force on Bitcoin. And you can see it in the numbers as we still move up. Okay, I'm hearing from Aaron that you can't hear me. Let me try to fix that. Let me see if I can hear myself here. Okay, so it does seem like it's working. It just seems like my buddy Aaron can't find out, so just wanted to check, make sure that is the case. But I do see it coming in here. So again, I just did double checked it. Okay, so again, as we get moving here, some other things that I have been looking at here is Bitcoin and how it is moving up. how the U.S. exchanges amount of Bitcoin that they have currently um, is working, so to speak. And we're seeing that since July, we've seen an increase in the reserves here in the U.S. as a ratio versus reserves found overseas. So what we're seeing again is as these Bitcoin ETFs are coming in, we're seeing more and more of the Bitcoin getting moved into the U.S. As a as investor desire is approaching it. So that's a good thing to see, in my opinion. It is one of those things that when it comes to Bitcoin, you look for. So definitely one of the things I wanted to bring up here. I was also looking at Bitcoin's OTC balances here. I do this on Crypto Quant here. This is the over-the-counter balances, because we see exchange balances talked about a lot. But what I need to warn everybody is that when ETFs are using Bitcoin or buying Bitcoin, they're doing so in what's called the over-the-counter markets. So they're not doing it directly through an exchange. They're not filling orders that are orders from, say you and I at Coinbase. They have their own sort of closed entity. And part of that reason is they want to buy at volume without a huge slippage amount. So OTCs allow for that. And what we can really see here is I can blow it up to look basically from this year, January through. And what we saw from January through about June, pretty low amounts of Bitcoin available in the OTCs. And there was a couple of reasons for this. As again, we saw the ETFs get approval, they started to gobble it up a little bit more. As we saw more and more people talk about self-custody, we've seen more and more people pull it off of all exchanges, holding their Bitcoin. And what we've seen is that the whales were really holding and even acquiring more Bitcoin. I talk about that a lot, right? As the whales acquire or the whales sell, it's something to keep an eye on. And when we normally are starting to see a bull market, what do we see? We see whales start to put some of their Bitcoin available to be sold. So, and that's what we're seeing here. It started back in June, and you can see that we had a steady increase. The reason I'm bringing it up right now is since the beginning or about September 9th, we've seen that level really level off here. We saw it. There was about 400,000 Bitcoin available at the beginning of the month, and there's about 412 now. So it's really leveled off, and that's where we're seeing the price now move in the positive direction. So I do think that what we're starting to see is we could start to be seeing the supply constriction that you start to see after the halvening. So the halvening happened in April here, back over here in April. And it usually takes 6 to 8 months till you start to see that move itself over to the world of the actual exchanges and where it starts to make a difference in price. So we are starting to see that level off. So again, I'm seeing some catalysts that mean we could actually make that move up towards, the 68 run or the 70 level again here over the next 6 to 8 weeks. People always ask me, when are we going to set a new all-time high? When are we going to do this? When are we going to do that? I have been stressing all along that the time to do this was, to start accumulating was back every time that it hit this 54, 55 level. I'm not going to say I told you so, but, when we hit back here in July, I said time to get some. When we hit back here in August, I said it's time to get some. And we hit back here in September, I said it was time to get some. And I've showed my buys on each of those occasions. I do sell some of it off as we approach. So again, I will be looking. I did tell you when I was going to push some of it off in that 63 area. I did do that. What I'm holding now is what I tend to hold all the way through. So I will, not really sell anything off into the 68 level. Don't get me wrong. If we blow through 68, head to a 70, I might take an advantage of that to make a little bit more sell off there and wait for the next, short-term retrace for me to be able to buy it back. I'm a big believer in doing that. Some other things I wanted to talk about is as we get to the OTC markets that I was just talking about. One thing that I'm noticing is that Hong Kong is really trying to get into that business. I do a lot of consulting, and I've noticed a big burst of activity trying to get OTC trading desks and firms into the Hong Kong market. And what we now have seen is that Hong Kong regulators announced plans to get their regulations sort of in line with what we see in Europe. You know, Europe had the MICA, which is the markets and the crypto regulations that are very extensive that will finish taking place in December of this year in the EU. And what we now see is that Hong Kong is aligning their derivative reporting or OTC reporting in line with how MICA will be rolling out. So it's good to see that. I'm hoping we see something similar here in the U.S. We'll talk a little bit about what's going on regulatory here in the U.S. in a minute, but we do see, that they are back in the game in Hong Kong. We've seen it. They sometimes they have a love-hate relationship with crypto. Sometimes they're all about it. Other times, they pull back because of the fact that they can't control parts of it. So we're definitely seeing them make a strong merge into that. We've seen a lot going on in stable coins in Hong Kong also. So again, just something to bring up there that I think is important. As we stay on the front of regulations, I will say that saw some articles talking about how the market in crypto assets, which is MICA, and how it could cause some issues in the European, crypto landscape. And I do think that it's something that we have to keep in mind or that we worry about when it comes to regulation. I am one that is a strong proponent of regulatory oversight of the crypto industry. We've seen what happens when we don't have it. I don't want over regulation. I don't want burdensome compliance that maybe isn't needed that can throw things off. And that's what I saw an article talking about it there. It was coming from the European Blockchain Convention that just ended up in Barcelona, and Anastasia Platonikova, who is the CEO of Fidium, which is a regulatory and blockchain infrastructure firm that ABCA works with. And she was talking about that she's worried about the fact that it would require consolidation by smaller companies to be able to compete in this world that we're coming to, where we see crypto and TradFi more and more intersections of that, And what she's worried about is if regulatory compliance becomes too overburdensome because of the differences in enforcement at the different local and national levels. And that's where part of this still plays out, is that while MICA sets up a framework for the EU, each country and even below that, subdivisions of countries, areas within countries have different rules and regulations of how they're going to enforce different things within the the crypto sector. So the fear is if they make it too complex, they'll force out the small players. And what could happen is either those small firms will get gobbled up, or they'll get run over by the big TradFi firms. And one of the things that they brought up, or that she brought up, for instance, was that Societe Generale, one of the largest banking groups, in fact, one of the top 20 banking groups by assets, has partnered with Bitpanda to launch a MICA compliant stablecoin. So, again, and we've seen this in the US, and we see it again with folks like, BlackRock entering the ETF business, Fidelity and others. We're seeing it in Europe too, where the banks are getting involved and the traditional finance people are getting involved. And part of that gets worrisome for those that are traditional crypto people like myself is that if we make these levels of regulation too cumbersome, if we make compliance too hard for the small firms, they won't be able to keep up. And that's where we have to worry that doesn't happen. So that's what I see in the regulation front here in the U.S. It's interesting. I do have a couple of notes. My boy Gary Gensler was in front of the House and Senate committees this week. He did get drilled by all of the Republicans and some of the Democrats about his, regulation through enforcement, um, you know, methods of taking care of the system. He was on CNBC. He's a one-trick pony, man. He sticks with his same thing. He still says, he knows more than everybody else, and the systems and places, the rules and regulations that are in place, they've been in place. They don't need anything special for crypto. Crypto doesn't deserve any special, rules or regulations, and they should just come in guidelines with what's already there and available in the marketplace. But we know that isn't really the case, right? Because when we try to knock on the door to get in to, see them, they won't talk to us. They won't give us advice. They won't, facilitate sandboxes to try things out like we see in Europe, the UAE, Singapore, Hong Kong. So they have slowed it down. The good news is, at the end of this term, it is most likely that we will not see Gary Gensler anymore as a regulator, although he's still trying to become the person in charge of Treasury. He would like Janet Yellen's job. With that being said, we are seeing, crypto is not going down without a fight when it comes to that also. We are seeing here in Ohio, where I now live, there is a ton of money in the way of about $40 million that has come in from the crypto PACs to support Bernie Moreno's opposition of Senator Sherrod Brown. Anybody that was part of the crypto room over at Prosper Trading when I was there knows that I am not a fan of Sherrod Brown. I am so happy to see this. While I have not done anything on a local level to try to benefit Bernie Moreno outside of telling my family, friends, anyone that will listen to me here in Ohio to vote out Sherrod Brown. But, that's what we're seeing here. They are absolutely putting their money, where they want. And it's closed the needle. Moreno has actually taken a lead here in Ohio, and he was down by about 20 points when this money started to roll in. And I will tell you that it is just on TV nonstop. The same PACs are backing John Deaton, who was or is one of the lawyers that represented Ripple in their case. But he's got a much more uphill battle. He's going against my girl, Elizabeth Warren, in Massachusetts, and he's way behind. But again, they're spending their money there. They've been spending it around the U.S., and they've been fairly successful. They've actually got about 2 or 3 people onto the ballots through the primaries that were pro-crypto. So good to see that. One of the other things I was looking at today, as we don't just talk about Bitcoin here, was Grayscale came up with their new research insights, and what they do is every quarter they talk about what they consider to be the 20 most important cryptos, or the cryptos with the their highest conviction, so to speak, and they reshuffle it every 6 months. So it was interesting to see what the changes were. What came in, what went out. Let's start with the good news. What went in? Sui we know is a layer 1 smart contract built by the folks that were behind Meta's project that got canned. They've definitely done their homework. They're doing a good job, so that's not surprising to see there. I'm not even familiar. I have to do some research into this next one, BitTensor, which is a platform that facilitates the development of open and global AI systems. I don't know much about it. I will learn more about it, and we'll definitely have a session on it next week. Optimism, which we talked about last week, is one of the reasons that Ethereum is actually having some issues right now. I have an article on that to discuss today, but Optimism was added. For all of you, again, that have been following me for a while, another one of Hondo's favorite projects, Helium, back in the top 20 here for Grayscale. Helium, a lot of us have Helium miners. They are in what's called the DPIN category, or the decentralized physical infrastructure. So interesting to see them on there. Helium's been on a hell of a ride since they moved over to Solana as the blockchain that they operate on. You can see here the daily chart, it had bottomed out in that 3 range and now back up, 770, had broken the $8 range a couple of weeks ago. So not that surprising to see that on there. We also have CeeLo. CeeLo was one of the first mobile blockchains. It was designed to be a mobile, low usage blockchain, doesn't use much energy, doesn't take a lot of computing power. So that's interesting to see that one on there. And the last one is UMA protocol, which is the optimistic Oracle network that provides Polymarket with all of their prediction market data, along with other product protocols, not just Polymarket. So again, similar to what Chainlink does, UMA is an Oracle network, and again, it's one that's got a lot of love lately. So those are the ones that have entered. The ones that left, I did have that here. They were Render, Mantle, Thorchain, Pendle, Alluvium, and Radium. And they do put a note here to say that they continue to see value in each of these projects as they remain important elements of the crypto ecosystem. However, we believe the revised top 20 list may offer more compelling risk-adjusted returns for the coming quarter. I am a big fan of Render. As most people know, Render is using GPUs on a shared basis. They've partnered with Apple and many others. I'm not that familiar with Mantle. Thorchain has been around for a long time. Pendle, another one I was not that familiar with. Alluvium, I am a fan of, and I'm going to talk a little bit about gaming in a second here, because I do think that gaming might take an upturn here based upon some regulatory clarity in Japan. And lastly, Radium, which is a decentralized exchange offered on Solana. Kind of funny because it's one of those ones I sort of forgot about because it was an SPF project. It was one of the ones that they held a lot of coins for. So until the whole FTX fiasco played out, which is finally almost all the way done, that was one that I wouldn't have really taken a look at. So that's what Grayscale sees in front of us here. I mentioned I was going to talk a little bit about Ethereum, which, as I said, is making a nice move up here today. Daily chart, if for those that want to know what my view is there. Let me just delete what I just drew because I didn't mean to. You can see that Ethereum has some real good support here every time it gets down to that 2150 to 22 level. So I will point that out. I don't see anything in the future that would take us down below those levels. Again, I'm not a buyer necessarily at a top of a run here. I'd like to see what happens over the next couple of weeks. Do we get a pullback? But it does look like to me like Ethereum is ready to do a little bit more damage than it has. I talked last week about some of the issues behind Ethereum right now, and part of that is the layer 2 scaling solutions. For so long, a lot of people, myself included, were talking about how we needed layer 2 solutions because of all the issues. Ethereum just couldn't scale at the rate that it needed to continue to be the top blockchain network that all other basically dApps get built on. There are a few others, but you really needed some more help there to make that work. And EIP 1559 was supposed to be a game changer in the fact that it was going to burn, not that it was going to, it does burn a good amount of the transaction fees of every transaction that happens on the Ethereum blockchain. The problem is that we've seen a huge increase in the amount of transactions that are getting done on those layer 2 solutions, whether they be Optimism, ZK Snark, Polygon, I'm forgetting a few others here, but Arbitrum, Optimism, if I didn't say those. So there are a lot of them out there, and what has now come up as, showing that, they're looking at what's happening and they're going to adapt. Vitalik came out with a letter or a blog post this week talking about the need to increase the blob size within Ethereum. And what the blob size is during the last improvement protocol to Bitcoin, they created the ability for what's called proto-dank sharding. And it's basically just scaling on Ethereum. It's the way that Ethereum is going to scale down the road. Ethereum right now is a one-lane superhighway where everything works in one straight line of the blockchain. the idea is with proto dank sharding that eventually there will be 64 basically lanes of Ethereum running at one time, and they'll all link up into one final chain when they do their individual processing. They'll then lock into the chain, and that's how Ethereum is going to tremendously scale. So what's happened is they needed to increase the size of these blobs because they're already at about 75% of their capacity. So what I mean there is when we when they allocated this room for this photo dark shanking to happen and for these other data to be stored on the blockchain that doesn't get basically computed, they made a size of it. We're already at about 75% capacity with the amount of L2 that's happening right now. So they're talking about increasing the size of it. I do think it is it's great to see what Ethereum does that we don't see as much on a lot of other blockchains, is forward thinking and a team that actually is working to improve it. So, it is great to see that. It continues to happen. So EIP 7623 is the proposal that will increase the data availability to blobs and should hopefully start to help a little bit with Ethereum. Sticking in the world of altcoins, wouldn't be a show if I didn't talk a little bit about Ripple. Not really about its price here, but we are getting up to sort of the next D-Day for Ripple. And what I mean there is I think the SEC only has till October 7th to appeal the ruling, or parts of the ruling from Judge Torres. And what we did see supposedly was that a former attorney for the SEC had come out and said that the SEC is going to appeal. That everyone over at the SEC truly believes the decision is wrong, that it's not a good law, and it should be appealed. So we will see if that is the case. We've had several of sort of the experts come in and give their view. I mentioned John Deaton because he is running for Senate in Massachusetts, but he was probably the main lawyer dealing with the SEC and Ripple's case. He represented all of us that are Ripple holders in the case. And Deaton says Judge Torrey's ruling was very fact-specific, relying on the submitted Ripple holders' affidavits. Further, the SEC failed to establish a common enterprise. This is the second condition of the Howey test, and appealing the ruling would not make sense. Again, we know the Howey test outlines 4 criteria that must be met for an investment contract to qualify as a security. First, there has to be the investment of money. Second, the investment must be in a common enterprise. Third, there should be an expectation of profits. And finally, these profits should result from the efforts of others. And Judge Torrey's key finding in the Ripple case hinged on that third requirement. Specifically, the court determined that Ripple's or XRP's sale on exchanges did not meet the expectation of profits based upon the efforts of others. The ruling concluded that selling XRP on exchanges where buyers purchased through an order book rather than directly from Ripple in an ICO or IEO did not violate security laws. So again, remember that he is the guy that played a significant role in the case, submitting the amicus brief on behalf of XRP holders. His efforts contributed to the court's ruling, with Judge Torres citing his submission as part of the decision. Another legal expert and XRP advocate, Fred Rispoli, also weighed in. He articulated that the court explicitly said programmatic sales and not secondary sales. Again, so everybody seems to point to that same spot. We also have Jeremy Hogan, who is probably the most popular sort of crypto lawyer on Twitter, X, excuse me, and he's a partner at Hogan and Hogan. He said the real question is whether the ruling was truly incorrect or the SEC simply doesn't like the outcome. As Gary Gensler often says, disliking a law is different from not understanding it. If the SEC does not agree with the current law, they should not appeal but should push Congress for updated regulations. So we'll see what happens here in the next few weeks. as my man Steve would say, I'm not scared. What else did I see in the world of crypto that had me excited this week? Not my dad and my dogs, although they always do get me excited. Not the ETF side. I did want to pull up this for everybody to see. So, in the news this week was that Guggenheim is going to issue $20 million worth of tokenized commercial paper on Ethereum. And, Guggenheim Treasury Securities, a subsidiary of the financial consulting firm Guggenheim Capital, is issued $20 million worth of digital commercial paper on Ethereum. The DCP received a P1 credit rating from Moody's, so it received basically one of the highest ratings that they give. I don't think a lot of people understand that this is happening. There is a ton of tokenized blockchain-based trading that's happening. And this is, I pulled up Securitize, which is the company that does a lot of it, that does the majority of it, and what they're doing and how they do it. And what you see is that they have, a bunch of different funds that have already been tokenized. We talked about BlackRock. They've tokenized their fund. You got Hamilton Lane. You got KKR, RE, ARCA, U.S. Treasury Fund. More by Hamilton Lane, more by ARCA. They're 22X's. We just talked about that a couple of days ago, Protos. So there are a ton of these that are coming out. We're seeing it more and more. So we are seeing the intersection of this. We're seeing the use case. And like I said, in the case of what Guggenheim's doing is they're doing it on the public Ethereum blockchain. The same as these are. So that's what's bullish about Bitcoin. I will say that Solana is in that game also. We did hear that Franklin Templeton and Citigroup are exploring using Solana for some financial products. So that's going to be interesting to see if that plays out. It would give a nice little boost to what Solana has going on. And then I've got two last things I do want to mention. First one is it looks like our boy CZ, the former CEO of of Binance, is going to get out of jail either today or Monday. So he has served his time and will be getting out. It will be interesting to see what he has to say. And then, sort of lastly, something that's really important in my opinion and should be important to everybody that likes free speech. And that's what's going on with Tornado Cash. And I don't know if people saw, but I'll pull it up here. Tornado Cash's Roman Storm has had the judge dismiss his look at a dismissal from the case brought to him from the DOJ. And it's really, really, really concerning because in a couple of different spots, but, whether or not this happens, and there's a chance he goes to jail for 45 years. He wrote a piece of code. Now, I do think there's more that goes into it. And in the judge's hearing, he basically said that, they knew that this code was going to be used maliciously, and that's why that they wouldn't dismiss the case. They said it's up to a jury. Now, he didn't say he's guilty. He said it just goes to trial and that a jury needs to make a decision of the intent of these producers. And I will say it's a tough one because I was one of the people firmly against Tornado Cash. Again, those that follow me on Twitter and, when I was with Prosper Trading Academy, I railed against Tornado Cash because everybody knew it's where money was getting laundered, where people were going when they were hacking, and all that. And they did nothing to stop it. And, they're sort of trying to play the hear nothing, see nothing, know nothing type philosophy to that. So for me, that part comes down, kind of hard that, they knew what was going on. But I do think it's important to point out that, Jake Chervinsky, who was formerly the head of chief legal officer for the Blockchain Association. He's now the chief legal officer for Variant. Um, he put this in a good way, and he said, if you think it's okay, it's only a crypto problem that the government wants to hold software developers liable for third-party abuse of their code. Think again. Today it's Tornado Cash. Tomorrow it's AI models and whatever else challenges state power. Build an AI agent used by bad guys, jail. It's shocking to me that almost none of the non-crypto civil rights groups have engaged here, and it's true, none of them have. Crypto is on the front lines of the battle for free speech, financial privacy, and due process in the U.S. But the groups that you'd expect to show up and fight are nowhere to be found. I'm not about to give you "They First Came From Me" poem, but in case you care about individual rights and civil liberties at all, the precedent began set in the DOJ's prosecution of Roman Storm should radicalize you. It's a slippery slope, and we're sliding down fast. Pay attention. And it really does go down to whether or not code is free speech. And, it's one that I definitely believe it is. Code is free speech. Bitcoin is free speech. There's a great article that was written, article by Stonegate and Nick. I think I have it here. Hold on one second. Nick Carter and the folks. No, I guess I don't. But Nick Carter and his folks did a really good paper talking about the slippery slope and where you're at and why Bitcoin is a freedom of speech in a way. It's a freedom of monetary, freedom. And this is important. It really is. It's this type of thing is sending. I can tell you because we get our the people at ABCA. We deal with folks that create some of these platforms that are small developers that are looking to build things that are trying just to make a living, and they're worried about doing it in the U.S. and they're worried about it in a lot of different ways. And what you don't want to have happen is this drives people underground. And when you drive people underground, what happens, in my opinion, is the bad actors actually win, because the bad actors hide underground with the good actors, and that's how you end up with all of these issues that we've seen. So just keep an eye out for this. They are collecting money for it. I'm not saying go and give them your money, but it's definitely a trial, and you want to keep your eye on what's going on here, because it could really change where and how computer programming gets done in the future. So let's take one last look at Bitcoin's price here before we call it a day. And we are at 65,704, so right about the midpoint of our daily trading range today. You can see we've sort of seen a little bit of a double bottom here on the short-term chart. On the hourly chart, though, still looking a little weak, and I've given you my views on the daily chart. So for Howard Greenberg, everybody have a fantastic weekend. I will see you bright and early 9 a.m. Monday morning. I will tell you we have some great stuff going on Monday. We have Steve Flanagan, an FX expert that worked 35 years at JP Morgan. We have Agnieszka Wood coming to do the trading mindset moment at noon with me. And then, of course, we always have our man Scott Bauer at 1 o'clock doing his market minds from the floor of the CBOE. And I will be back at 2 o'clock on Monday to do my Crypto Corner update. We went a little longer today than normal. Part of that was making sure the feed actually was working. So everybody have a fantastic weekend, and I'll see you next time.